I distinctly remember that when we met in December, you said you bought into Zomato, you
Yes.
bought into Paytm.
Yeah.
And it must be a painful position because post-December, those stocks, they fell another 20%, another 25%. But the tide has turned
Yes.
for Paytm Italy and for Zomato and for Policy Bazaar. Are best of the gains behind them?
No, I think the story is just about getting started.
For all of them or just anything specific here?
No, I think specifically, we are bullish on Paytm
Okay.
and Zomato. We also like Policy Bazaar. We are also playing some of these through Info Edge because that has a cash flow business plus a holding in that, right? But I think that these businesses have a long runway for growth. Just like the FMCG companies in the 80s had a long runway for growth, right? I can't see too many businesses compounding at 30-35% top line.
Very few actually.
Very few, right? But Zomato could compound top line for the next couple of years. And if they start becoming more profitable than what they are today, then I think that's where the value, that's where the money is going to be made.
Operating leverage will kick
The
in.
operating leverage should kick in. They're becoming more disciplined about their capital allocation. They are focusing on profitability and cash flows. And they have leading positions in their respective sectors. I mean, it's a duopoly now between Swiggy and Zomato. And I think Zomato has a slight edge over Swiggy. And in payments, Paytm has created a fantastic platform. And everybody is now realizing the value of payments, though it doesn't make great money, it makes some money. But it's what you cross-sell to your payments customer is where you actually make money, and that's what Paytm is doing by lending. There are 8-9 NBFCs behind that, but they have the platform and the data to lend to these individuals, and they're building a book and they're making money on that. Right?
The market cap of a Zomato is almost $9-10 billion. Paytm nearing there in terms of a market cap. So while the growth may be visible, and in terms of a need and what they would do in terms of creating a community and also ecosystem is going to be very large. But if you're looking at the market caps, 70,000 crore, nearing $10 billion for Zomato, aren't these stocks then priced to perfection purely based on the market cap versus the size of the opportunity?
Nikunj, we have to, if we are talking about our economy being 5 and 6 trillion, what is 50, 60, 70,000 crores? We have to grow out of these numbers. We are not
think big
in the 2000s, right, where a 1 lakh crore market cap seemed so big, right? By international standards, our large caps are mid caps, right? Even the Reliances of the world at 16, I mean, the real big caps in the US have crossed $1 trillion in market cap, right? You have to look at it in the context of first of all, if for the whole of the country there are going to be only 2 food delivery companies, then the opportunity is much bigger, right? And today maybe 100 million customers out of 1.4 billion are using a service like this. 5 years out, 200 million, 250 million of the middle class households that we talk about might use that, and then the frequency of use might improve. So I think there is significant runway for growth, right? I think the problem was that the market caps at which they went public were wrong, clearly, right? Because the valuations in post-COVID in 2021 for everything that was digital was just way out of whack. I think we've come down, there's more rationality in valuations. So you have to look at from here where, and I think there is reasonable runway for growth.